perspective, we have structural high, structural low. We are above the 50% area, so we are in a premium, right? Again, using our structural tool. Now, the final thing we want to ask ourselves is price at an area of supply and demand, right? So supply and demand isn't a fair value gap. Supply and demand is not some random line that you draw. Supply and demand comes from specific fair value gap areas that have absorption, right? I've explained this many times. The reason you don't get it is because you haven't put in the chart time or the work to understand where these absorption areas are. It takes chart time, it takes practice, it takes screen time, it takes getting it wrong before you get it right, and you'll still get it wrong as you're getting it right? So this is just a basic summary of what's going on. So the first pillar is market structure. These are the highs and lows. Then from there we have our dealing range. Then from there we understand premium and discount. So these are premium absorption areas, these are discount absorption areas. And then of course finding the key level. So no key level, no trade, right? That I work very heavily on that principle. So once we have our market structure, we're bearish, we have a bearish dealing range, we're in the premium, we have an absorption area, and then we go short only at one of these key levels over here, right? So this is how I build a story when it comes to taking trades. So when it comes to trading on the lower time frames, I'm typically using a 3-step model. I call it the XXX model, and it allows me to read the story of the price in only 3 simple tools, right? So the only 3 tools you need ever. So we're going to be going over the basics before I go to the charts. And so on the 15-minute time frame, I'm looking for a 15-minute range break with a key level. So the reason why I call it a range break is because I don't want traders to confuse this with the orb, right? So this is not